It is May 22nd, 2026, and today is the day that Kevin Warsh, the new Federal Reserve Chairman, has been sworn in at the White House by Chief Justice. I think he's Chief Justice. Let me check and see if that is correct. Let me ask Google. Just checking here. Yeah, not Chief Justice, but Supreme Court Justice Clarence Thomas swore in Kevin Warsh as the 17th Fed chair today. And I have some stuff to say about that because I have a personal theory. It's just my personal idea that is just a theory. I could be completely wrong on this. Okay? I could be completely wrong with this. But collectively speaking, generally speaking, if you talk to most of the people in the United States and in the world, maybe, it's generally understood that the President of the United States is the most important political figure in the world. And definitely one of the most, if not the most, important people in the world and powerful people in the world for everything that they did, that the president can do, and how it impacts the world and everybody's day-to-day life, and so on and so forth. Now, the United States is not a dictatorship, but we are the wealthiest country in the world. We have the largest military in the world. We have the reserve currency, and we are the shining light, the shining city on the hill, per se, even with all our problems that we have to deal with. And that is basically the general consensus, that the president is the most powerful person in the world. And I have had the theory, the idea, for quite some time that the most important, influential, and has the most consequences and impact, and can have the most influence on the world in general, is not the president of the United States, because we live in a democracy, and there's only so much that a president himself can do. Now, that's not to say that the president is not a powerful, influential, important person in the world. I'm just saying that he's not number one. I'm saying if you had to pick one specific role that has the most importance, that makes them the most important figure, the most influential figure, that has the most impact on other countries, other governments, on what markets do, on what everybody's day-to-day life is, I would say the number one person, and therefore, if you had to select one person that is the most important person in the world, I would say that's the Federal Reserve Chairman. And the reason why I think that is it's a conclusion that I came to over time. And I started thinking about it and noodling about it after the great financial crisis. And when I was going to college and trading out of my college apartment in the time after the great financial crisis, I started thinking about it because at the peak of his power before he left the Federal Reserve, Alan Greenspan, who is arguably the greatest Fed chair ever, he had a nickname called the Maestro, and he was on the cover of The Economist and all these different magazines in the early 2000s. Everybody loved the guy. He was like the maestro, master of the universe type of thing. And he was even on the cover of like Time magazine where he said like the committee to save the world and all this stuff. But he was like adorned by people, and everyone in Washington from both parties, Democrats and Republicans, all like they would never step up to the guy and say anything against him. I mean, he was revered, and he had a lot of influence and power, not just on money supply, not just on markets, but also the political landscape in Washington in general. By the time we got into the 2000s, before he retired in 2006, in January 2006. And I think that to defend my argument that the Federal Reserve is the most powerful, most influential, important person in the world, I mean, look at how much the Fed played an impact on both creating a financial crisis, attributing to a financial crisis in the early 2000s, and then saving us from another Great Depression after the financial crisis. And after that, in my opinion, creating populism with first of all, financial crisis, but then second of all, doing zero interest rate policy, then doing other measures like QE, quantitative easing 1, quantitative easing 2, Operation Twist, all this different stuff, which in my opinion pushed easy money into the hands of the wealthy, and that money was never trickled down through the system like what they wanted it to the poor. And now we have this huge wealth gap, which has just created more and more problems with anger, populism, the Great Divide essentially in America. And I think that the Federal Reserve had a huge impact on that. So all this stuff that has happened over the past 5, 10, 15, 20 years, it confirms what my original opinion is, that the Federal Reserve Chairman is the most powerful person in the world, if you had to pick one person. And you know, all the inflationary pressures that we're seeing today, and we've seen since the pandemic began, that was a result, to a large extent, on the policies of the Powell Fed. And that is having that inflation that has come from a result of the pandemic, the high street inflation, not the asset inflation that has come since post-Great Financial Crisis, the high street inflation that affects gas prices, groceries, and everyday things that we are experiencing since the pandemic with the J. Powell Fed. That is the result of the Powell Fed not being quick enough to raise rates to combat inflation, and then to then pivot and come back down to lower interest rates quickly to get the economy going again. In my opinion, those are two major mistakes by the Fed over the past 6 years. And all Americans are living with these consequences on a day-to-day basis. In addition to seeing the effects of the populism and anger that has built up in America with this wealth gap that we got as a result of all the easy money that went into the system over the past 15 plus years. And this has all happened through both Democrat presidents, Republican presidents, everything. It goes back to the Fed, and that is because the Fed is the central bank to the world. And I personally think that, Kevin Warsh becoming the Federal Reserve Chair is not big news right now. I don't think. But I think it's a huge, huge, huge deal. I think Jay Powell was a horrible Fed chair. I'm glad he's leaving. He's still going to be a Fed governor because he's such a. I think he stayed on the Fed as a Fed governor out of spite, in my opinion. He just wants to stick up for the Fed independence and kind of he's pissed off at Trump. And what I'm saying, I'm not like picking sides politically, like Republican and Democrat. This has happened through all regimes, both Republican and Democrat. But my point is that the Fed chair is the most powerful person in the world. It has a huge effect on the world in so many different ways, and individual, lives in so many different ways. And I wonder if you ask like 100 people out in like at the mall or on the side of the road, hey, do you know who Kevin Warsh is? They probably never heard of the guy, unless they're involved in markets and really, really closely following what's going on. But the average person, they don't really know who he is. But a lot of people that don't follow markets super closely, they know who Jay Powell is. And the reason for that is because he was such a horrible Fed chair, in my opinion. Kevin Warsh himself says, we should be on page B12 of the news. We shouldn't be front and center. Because when people have, healthy jobs, are making decent living, and prices are stable and under control and markets are rising, they're concerned about other things, not who the Fed chair is. So I think he's got a great point. And I personally really, really like the guy. I think he's fantastic. When I first started trading in the 2005 period, Alan Greenspan was still Fed chair, and he was a very different central banker than what we've been dealing with for the past 20 years. He spoke in these weird, vague riddles. He was, laissez-faire, limited government, free markets, and that the market, he believed that the market will work it out and figure stuff out, and the Fed chair has to make his own individual discretionary decisions based on what the market is telling them, and not try to forecast and predict the future based on hard-line beliefs. Just kind of be open-minded, let the market tell you what's going on, and then don't be data dependent, because the market will tell you more than the data, and be reactive to what happens. And what happens in the economy, what happens in markets, and so forth. And that is 100% what I believe in. I am 100% on board with that. And I think the Fed talks way too much. They do speeches. They have all these different, stuff they say. They don't shut up. They get into stuff like DEI crap that shouldn't be dealt with the Federal Reserve. I mean, this is just a horrible Fed chair that we've had over the past couple years. And I'm glad he's gone. I'm glad he's leaving. And even with Powell leaving, he's still staying around. He's still a governor. But I'm excited to see someone like Kevin Warsh, who has, background studying Milton Friedman, is a supply side economist, believes in limited government, believes in a Fed that needs to take the step back and kind of just not get involved with shit, that isn't going to be data dependent, that won't talk too much. I mean, that's the type of Fed chair we need. The big difference with Warsh and Greenspan is Greenspan believed that there should be more discretionary, instinctual element to making decisions, whereas Warsh, presumptually, we'll find out if this is the case, is more when something changes and something happens in the world, be reactionary, but use mathematical models to guide your decision making. So that is what is to come, but we are now in a new era with a new Fed chair, and things won't be the same. My belief is that the fact that you have a supply side, free market, Milton Friedman type of individual leading the Fed, I think that is going to have a lot of impact and influence throughout Washington, throughout monetary policy, and throughout everyone's day-to-day life. And definitely throughout the Fed. But it won't happen overnight. But people will find out. People will see how the effects of these policies are much better than what they've been dealing with for the past 20 years. And they'll never give credit to the Federal Reserve Chair, at least not right away. But it's going to greatly impact the world and markets in a very positive way going forward. But it's going to be a slow, gradual process. It doesn't happen overnight. So I'm glad Kevin Warsh is the new Fed chair, and I think this is a huge game changer, because for the past 20 years, basically, we've been living through demand side Keynesianism, neocon type of policies. And someone like John Maynard Keynes, who created the demand side type of monetary policy that we've been living through, strictly believed that Milton Friedman said that he was an elitist, and Keynes believed that you can have a ruling elite class, and that's not necessarily super negative for society as a whole. He believed that that's okay. It didn't have a huge impact on the greater economy and the total economy and society as a whole. And I think that is completely wrong. And I think what we're seeing now in the world with the wealth gap that we have, uh, confirms that Milton Friedman is right and Keynes is wrong. And you know, I think that, you know, you can basically, I don't want to say the wrong thing, but basically you can put economist and approach to monetary policy in basically two different categories, two simple categories to make everything simple. Is that you have supply side and demand side. And demand side is basically the approach that government spending stimulates the economy, and the supply side is that regulations and laws are horrible. You have to let the supply side, the people, the companies, the businesses that make the supplies that sell to the consumer, just be free and let them do their own thing, and stay out of their way. I'm on that camp. Okay, that was Reaganomics. That was, to a large extent, Bill Clinton. That was Greenspan. That was Milton Friedman. That is Kevin Warsh. Whereas what you had for the past 20 years with Bernanke, Yellen, and Powell is that you can't. Their beliefs were that if you deregulate, and I'm generally speaking here, if you deregulate too much, you get financial fraud, you get greed, you get bubbles, and then you get crashes, and that leads to financial instability, and that, to a large extent, is true. You know, when you had the many years of, you know, supply side economic policy, you got the dot-com bubble, you got the financial crisis, you got bubbles formed, and then you got market crashes, and then the supply siders believe that's when you are reactive and you rush in to help the system. You know, the Greenspan put, per se, right? But once markets are back to acting to normal, you have to back off and let them do their own thing. And that is what I believe. And I think that these demand side economists, and Warsh argues for this, says that, okay, for cutting interest rates to zero and doing quantitative easing to save the system in the couple years after the financial crisis was okay, but after a certain point in time, they should have backed off and let the economy do its thing. But the Fed did it, and that's all that money that was, you know, pumped into the system helped contribute to the populism and the wealth gap and the anger and the anxiety and the K-shaped economy that we have now. So it's important to understand all this as Kevin Warsh is going into the Fed, that you're not dealing with a demand side approach to the economy now. You're dealing with someone that's different. You're dealing with someone that thinks that inflation is a choice. It's not an accident. That basically he thinks that the Phillips curve is complete bullcrap. That innovation, creation, more business activity, more jobs does not spur on inflation. That actually creates deflationary pressures over time, and maybe short-term inflationary pressures that will then go away, but doesn't create sustainable inflation. And what creates inflation is the government pumping money into the system, specifically the type of money supply that was pumped into the system after COVID, when people got checks in their hands, because then money is spent at a high velocity and it makes prices go up. That is a choice. And that's why he says inflation is a choice. And so it's going to be very interesting. I think it's very exciting. I think it's a big deal that for the first time in 20 years, we now have a Fed chair that is now supply side, who was a student of Milton Friedman at Stanford in the early 90s, and not this thing that we're used to where the only way to get markets to go up and the economy to function is to pump money into the system and make this wealth gap bigger and bigger and bigger. We have someone that believes that the economy can do good on its own. Innovation will create more jobs, more productivity, will create higher wages and better prosperity for everyone. That trickle-down economics works when government backs off and deregulates, and that the government, the Federal Reserve and the government should step in when there's problems and issues. Now, the negative is, I think it works better than the other way, but you can also get bubbles forming. And I'm in the camp that we're not in a bubble now, but in the future we're going to have one. And probably have a nasty crash with it. So, with all that said, I just wanted to give my opinion on the new Fed chair. I don't think it's being discussed enough. I don't think people recognize how big of a regime shift this is and how big of a paradigm shift this is to the world, and how having a supply side Fed is going to drastically impact your day-to-day life differently than a demand side Fed over time. It's not a major shift. It's not like an overnight thing, but it's an overtime thing, and it's going to be the ultimate legacy of Donald Trump, I think, because we have to remember Donald Trump is going to be gone in 2 years. Kevin Warsh could be there for 8 years, 12 years, 16 years, 20 years. I mean, he's 56 years old, so he could be there for 20 years and, be 76 in 20 years. And if everybody loves his policies and loves him as a Fed chair, he may stick around for another 4 years until he's 80. We'll see how this all plays out. But I think that more people are going to be appointed to the Fed that align with his supply side economics over time to be Fed governors, and that will have an effect on Congress and even the administration, whoever's the president in the years to come. So whether it's Democrat or Republican, because remember, these politicians are malleable. They will go wherever the wind blows, and if people are happy with supply side economics over the next 2, 4, 6, 8 years, the politicians are gonna gravitate to that, and that's exactly what happened in the 80s. When Reagan was elected, then he made Greenspan Fed chair, and throughout the Bush administration, the Clinton administration, and then into the next Bush administration, everybody went into this they followed along and got in line with what Greenspan said, and the result was 20 plus years of big economic prosperity, and arguably the best time in American history. But the negative is, as people are prosperous, they're greedy, they become criminals, and you can't control them, especially when the government regulation and laws are taken away, and you get something like the financial crisis. And it is what it is. And then when we have some type of big crisis in the future, uh, you know, then demand side Fed chair steps in, and we start printing money again, and the whole cycle repeats itself. And that's where my idea is, to it's an extension to the most powerful person in the world being the Fed chair, is that you have these cycles throughout history, specifically after World War One, which was basically right before the Federal Reserve was created, where you have these periods of supply side economics with big booms, then you have crashes, and then you have periods of demand side economics with populism and social unrest, followed by periods of boom. Then you have periods of crisis, crash, populism, unrest, and it's this cyclical thing, and it's just the way the system works. And we're at that point now where we've had the big crash, that big crisis. We had the big crash, then we have the recovery phase, then you have the social chaos phase, the populist phase, and then you get into the golden era of prosperity that can last quite a long time. And then you have the inevitable crash, big kahuna crash in the future at some point. And the cycle repeats itself. And that could be like in 20 years from now. We may have smaller, recessions and crashes or economic hiccups before that, but the big crash, like the great financial crisis type of thing, comes later, like in 20 years or so, 25 years or so. And then you get the demand side, Keynesianism, neocon type of Fed chairs. After that, with recovery, and then the populism builds, and the social chaos happens, and then the cycle repeats itself. And basically we've been, dealing with populism for the past 20 years. People forget Obama ran as a populist in 2008. He ran as a populist and the election was in late 2008 as the financial crisis was happening. The Lehman Brothers collapsed 2 months before the election in 2008. And the establishment on the Democrat side was Hillary Clinton. She was running as president, and she was the establishment. And Obama was this cool, charismatic, smart black guy from Chicago, and he wiped the floor with her. And the populism kind of sprouted up during that election. The Tea Party on the right and Occupy Wall Street on the left. And those two movements ultimately, I think, evolved over the past 20 years into what is now MAGA and the woke stuff. So, between Obama and Trump over the past 20 years, we've had 14 years now of populist presidents. So that is my view of everything. And I think it's going to be a big deal because the effects of Kevin Warsh are going to trickle down throughout the economy and throughout Washington over time. And you can argue that this right here is the key regime shift that was initially started by Trump, because he appoints the Fed chair here. So there is a cause-effect relationship to all this. It's kind of like an evolutionary process. But this is key. And to my earlier point, where the president doesn't have as much power as we think he does, he wanted to originally appoint Kevin Warsh as Fed chair back in 2018. But people got involved and said, no, he wasn't good for the job because they wanted a demand side economist and so forth to be Fed chair. They wanted the mantra, and I don't think Trump was experienced enough to cut through that type of dynamic. And 8 years ago, Kevin Warsh was a lot younger, so and he wasn't a member of the Fed either. Jay Powell was. He was a governor back then, so he went with Jay Powell, who was a Republican. And he worked in the private sector. He was also a lawyer, and he's also a not even close to being a supply side economist. But this is my belief that this is a big deal, and Kevin Warsh is going to have a huge impact on the world. This is a huge regime shift happening today, and you can go back, if you can go in history 5, 10, 15, 20, 25 years from now, you're like, when did everything start to change? Remember that time when everybody was so divided and hated everyone? That kind of got better. When did that start to change? You could go back to when, people will say it was when Trump was president. Well, it was the key dynamic underneath that was having Kevin Warsh as Fed chair. So with that all said, let's take a look at some individual stocks. One, we got about 15, a little less than 15 minutes to the closing bell. One stock that I wanted to point out to everyone here. The one stock I wanted to point out to everyone today that has a fantastic setup is Callistica. And as we see here, Callistica, it has had a recent sell-off and traded down to the lower Bollinger Band. And I love how the stock tested the lower Bollinger Band and popped right off of it. And it's trading a little bit below the 20-day moving average. And I think it's still a little bit below an optimal buy point. It can go a little bit higher, but I think you got a buy point right here up to about $380 a share. And the way it's bounced off of this lower Bollinger Band is getting this 20 days a good early entry buy point, because once the stock gets up towards 425, you're going to start to get more interest in the stock, and the momentum investor is going to want to buy it before it breaks out higher. And I think now is a good point to buy it right here. You have a crossover buy in the 310 oscillator. The rate of change is now positive, and this chart is set up so that the slow line can start to turn up soon and go back into the positive. And so right here at 366, I think is a good buy point. Still early, but I like being early before people get interested in actually buying the stock above 400 and closer to 425. So Callistica looks very interesting to me. You look here on the weekly chart. It recently sold off and held that 20-week moving average, and it's just it can go back. It can easily go back up to the upper Bollinger Band on the weekly chart, which is around 410, and the upper Bollinger Band on the daily chart is right around 434. So that's I think the stock can easily get to 434, but also go above 450 or 460. So on a breakout. Another stock I wanted to mention that has broken out and is continuing to rally higher is Astera Labs. Astera Labs is just like Callistica. They're kind of in the same area for networks, providing equipment for networks for data centers. So Astera Labs recently broke out after a very elongated base, gradually selling off since September of last year, and it was back then, man, the stock was ripping. It was fantastic. It just kept going higher and higher, and as you can see here, both on the weekly and the daily, it pulled back, sold off, and finally hit a bottom here. You can see that bottom here in the stock price, and then you can also see that divergence in the oscillators, and then you can see the slow line going back above the zero line as the new uptrend formed, and since then the stock has just ripped higher, and the best point to buy it, you see it bouncing off the low, and you can always say, oh, it was in hindsight great to buy the bottom there at $100 a share. You didn't know that at that point. Yeah, you had to buy divergence, but I mean, come on, give me a break. A real more practical point where you could have bought the stock is right here around $197 to $199 a share as it was trading back above these previous swing highs. And it has traded to its all-time high, but is continuing to go higher. And we can take a look at another chart here. This chart is of the has Keltner channels, not Bollinger Bands. So basically, instead of using options volatility, it uses average true range. It's a lot smoother than Bollinger Bands, but you can see how it's way extended above the upper Keltner channel, and really now an extended stock. And you could argue that people that actually bought the stock down here, they're looking to sell it. The thing is that you look at the weekly, it's making highs in momentum, and the slow line's now trending up and going up, and the slow line on the daily's hooking up and going higher. So I think it can keep going up. Yes, it's extended right now, but if you get a day or two or three, and you get a pullback in this stock, I think you can buy it. Yeah, I'm not that person that has to buy, pullbacks and dips and stuff. I like to buy. I mean, when I say I don't have to buy, when I say buy pullbacks and dips, I mean like when stocks are trending lower, going lower. I'm not the guy that has to buy these big drops in a downtrend. I like to buy pullbacks and consolidation periods in an uptrend. And I think Astera is a stock to put on your list because it has fantastic fundamentals, and it's now in a new uptrend where if it does have a pullback, be ready to pounce. You can look to buy that stock. So if the stock, sells off down towards like 280 and forms some type of bull flag or whatever type of pattern, then you can look to buy some. Especially if it goes back to its previous high of around 262, that would be a great entry. And knowing that it's going to have to make new highs and go higher from there. So definitely something to keep on your watch list. Astera Labs, but not a buy today. So let's take a look at some other stocks. We got about 6 minutes left into the closing bell. This is my YouTube watch list that I've made. It's about 190 stocks on it. So just looking through it to see if anything else really sticks out to me. Oh, Eli Lilly. It's not. I don't know where it is on the list, but it is on there. There it is. Eli Lilly. This stock has been acting really well. As I like this stock for the peptide trade. And it has been having a nice bounce off of that lower Keltner channel. You can take a look at the let's take a look at the Bollinger Band chart here. You can see it bounced off of that lower Bollinger Band and is now climbing up higher as the Bollinger Band expands to the upside. And the one thing is that it's not making new momentum highs. It's not taking out this momentum high from before. So that isn't necessarily a sell signal to the upside. It just means that momentum is waning and a pullback is likely, and the following up move, it has to take out that momentum high or it's going to sell off. It's definitely a red flag. But all that being said, the slow line is trending up. If you go to the weekly chart, the slow line is turned up, but I think that slow line could get back above the zero line. If this stock continues to go up and get towards these previous highs levels, you can look for the momentum in the rate of change and in the fast slide to get close to the all-time highs. But I do like this chart in the fact that it is climbing. It can continue to go up as long as these oscillators continue to rise and eventually catch up to where they were before, or get close to where they were before. So I think the stock from this point can get at least to 1100, and then at that point I think you're going to get some type of pullback and consolidation, especially because once you get to this point at 1100, you probably won't get highs in the rate of change and in the fast line, and that will set up for some type of corrective sideways action, and that will form a nice little cup and handle pattern. And after that, you'll get some type of setup where you can break out higher. So because the fundamentals are good on Eli Lilly, and I love the story about the whole peptide stuff, you can buy right now, but be prepared for some type of corrective action to occur as it gets towards these previous highs, because the momentum, even though it's going up, is slowing down. It's going up, but not going up as fast as it was. So that means that there's going to be some type of corrective action in the future. All that said, the long-term trend in Eli Lilly is very bullish as the slow line continues to go up. So we have 1 minute to the closing bell. Let me check my positions here. And I am down on the day. I was up earlier today, but the S&Ps have really pulled back as the day has played out. We're still very close to all-time highs in the market, and we're due for some corrective action, and we may be starting to experience that right now. So I finished the day down, and that is it for me. We had a good session today. Talked about Kevin Warsh and looked through a few good stocks that have great setups. I will talk to you guys all later. Take care, and bye-bye.